All right, so today, Tuesday, the 4th of June, prior to the market, we talked about some upbeat comments China had, getting back to the table, all that stuff. 68% bullish, that's great. We rally, we break. But at 8:55 Central, some new information was going to come to the market and could potentially drive us. And it was Jerome Powell, chairman of the Feds, giving some testimony. And you had to put yourself in a position to know the market and investors are waiting to hear if he's backing or descending to what's kind of been the overall change in sentiment from Fed officials, going from staying steady to being dovish and maybe a rate cut or two before the year is out. Totally different than 6 months ago. They raised rates 7 months ago in December of 2018, a quarter point. They haven't done anything since. They went from hawkish to neutral to now dovish, which means lower rates. The market, especially stock indexes, will rally on a more dovish central bank. So it was eagerly awaiting what he was going to say, whether he was going to back up or kind of go head to head and not really agreeing with the dovish comment. So let me play this. This is right on these remarks. What we talk about in the room, this yellow line is the open. That's going to remain 80 or 69 quarter. We talk about in the room is where is the market at right before new information hits. Now we know new information is going to hit at 8:55. So it comes in at 666 even. The initial take on his comments are bullish. Let me pause it. They're bullish, which means dovish. Dovish means, yeah, he is kind of looking, the things he's saying are kind of being digested as being more dovish. Certainly not confrontational to the dove camp, all right? That's dovish is bullish for stocks. Couple things. Now this market's chopping sideways. It's beginning to establish a range, a quick range, albeit, but a range. And the range happens to be right underneath this yellow line or the open. He comes down as these comments are being laid out, hitting the wires. They're coming out every 30 seconds, 20 seconds, right? Each comment is being digested in and of itself. So the point is, it's a little dovish on the initial reaction. He comes in with another dovish comment talking about inflation being at ease, which is, you should know this. You don't have to be a central bank expert to know if they're not worried about inflation. It's easier to cut rates. That combined with this, and I got to illustrate this because it's important, that which is bullish for stocks combined with this next bit of information I'm going to tell you gives you the anticipation that there could be a breakout. The overlap of a dovish and bullish comment and the fact that it's already established the top of a range and buy stops could be elected above a certain area. Doesn't have to work for a ton. It just has to give you a head start. See the top of this range here? Let me draw it with this yellow shade. That's a consolidation box, all right? So in real time, I talked about, hey, that's bullish, that comment, and right through these 69 quarters, there's going to be some buy stops. So as you play it, it's not random that it happens. It's predictable. It's using fundamentals behind market structure to see that pop that you just saw. All right. Does it come back and sink back into this 66 to 69 area? Yes, it does. And so where we went from there, especially Tom and some other guys in the team room, was, now this is back to real time. Where was it? Back in here. 5 minutes, 10 minutes after the comment, it begins to set up this consolidation down here in the left. In fact, let me scroll back here a little bit. This is not going to be played on replay. This is what we're looking at right around 9 o'clock, 5-10 minutes after. The market's trying to digest, well, is this bullish enough to rally us? Is it bearish enough? Does it make sense? Does it fall in line? So the market at some point has to make a move. And we're trying to put ourselves in a position, number one, not be on the wrong side of it. And number two, to be able to establish where is the most likely chance to get on the right side. We had a green edge zone down here at 66. Again, 66 becomes ground zero because that's where the market was when he starts talking. We start to establish this consolidation all around here. I thought the market should have had better downside right in here. When it didn't, Tom was talking about this too, and guys in the room, once it could not break to the downside, looking at other correlations, the middle of this entire consolidation, which I had said about 67, 68 even, was not arbitrary. It wasn't just a price sitting out there. It was the middle of where this market was trading in between when Powell started talking. When they got through the middle, it was coiling and was going to most likely then make its move to the upside. So a couple highlights of the trade today, and had a lot to do with not only what happened pre-market, but what was going to happen and what did happen as the day started. And you got to know all that stuff to be able to absorb real time.